Welcome to Future Investor Stock Market Review. Today I'm going to talk about newly introduced index-based circuit breakers. The Colombo Stock Exchange recently introduced three circuit breakers to the market. Sometimes this may be due to coronavirus case. The stock market SPI all share price index down by 303 units. As a percentage, it is 6.22% in a single day due to panic selling. So to limit these circumstances, those circuit breakers may have established. So in this video, I'm going to talk about newly introduced circuit breaker, what is a circuit breaker, and history of circuit breaker. Now let's focus about this. This is the statement made by Securities Exchange Commission on applying the circuit breakers. First circuit breaker after commencement of trading of the Colombo Stock Exchange for the day, a market halt to be imposed for 30 minutes in the event the S&P SL20 index dropped by 5%. Then a second circuit breaker having recommenced trading after the cooling off period of 30 minutes following the S&P SL20 index drops of 5%. If the S&P SL2 index drops again by another 2.5%, a market halt will be imposed for another 30 minutes. Then the third circuit breaker. Upon recommencing trading subsequent to cooling off period of 30 minutes following the S&P SL20 drops by 2.5%, if the S&P SL20 index dropped by a further 2.5%, trading will be halted and the market shall be closed for the day. Now let's find about the circuit breaker's beginning and its history in the stock market activities. What is a circuit breaker? Circuit breakers are regulatory measures to temporarily halt in trading on an exchange, which are in place to curb panic selling. They apply both to broad market indices such as the S&P 500 as well as to individual securities and exist in the United States as well as in other countries. Circuit breakers function automatically, stopping trading when prices hit predefined levels such as 7%, 13%, and 20%. Intraday moves for the index. Circuit breakers are a form of market curbs. A recent example on March 9, 2020 and again on March 16, circuit breakers were triggered at the NYSE Stock Exchange at the DJI index fell more than 7% at the open amid the growing global coronavirus pandemic. Circuit breakers are temporary measures that halt trading which are used to curb panic selling on US stock exchange. Currently, US regulations have three levels of circuit breakers set to halt trading when the S&P 500 index drops by 7%, 13%, and 20%. The system of circuit breakers has been revised several times based on feedback from past crises, including the 1987 Black Monday crash. Now let's focus about how circuit breakers work. Regulators put the first circuit breakers in place following the market crash of October 1987, when the Dow Jones Industrial Average shed 508 points in a single day. The crash, which began in Hong Kong and soon affected the markets worldwide, came to be known as Black Monday. A second incident, the so-called flash crash of May 6, 2010, saw DJI drop almost 1,000 points over 9% in just 10 minutes. Prices mostly recovered by market loss, but the failure of the post 1987 circuit breakers to halt the crash caused the regulators put update the circuit breaker system. Today, the circuit breaker system applies both individual securities and market indices. For example, since February 2013, we have had market-wide circuit breakers which respond to single-day declines in the S&P 500 index. If the index falls by 7% below its previous close, this is known as level 1 decline. A level 2 decline refers to a drop in 13%, whereas a level 3 decline refers to a drop of 20%. Some analysts believe that circuit breakers are disruptive and keep the market artificially volatile by causing orders to build at the limit level and decreasing liquidity. Critics argue that if the markets were allowed to move freely without halts, they would settle into a more consistent equilibrium. For individual securities, circuit breakers can be triggered regardless of whether the price is increasing or decreasing. By contrast, circuit breakers that relate to broad market indices are only triggered based on downward price movements. Today I talked about stock market circuit breakers, and I will make more videos in next days about new trends in stock market, and keep subscribing my channel. Thank you.